The Johannesburg Stock Exchange lifts as investors mull over Chinese regulations. Our sentiment this week has also been driven by the COVID-19 Delta variant, as well as prospects for tighter U.S. monetary policy. Viv Govender, who is the portfolio manager at Rand Swiss, joins us now to talk through the latest business stories. Mr. Govender, a very warm welcome to you. This is the Daytime Update as we focus on the business stories of the day. Now, it is a mixed bag for the local index as well as the Rand this week. Is sentiment changing?
Yes, I mean, we are seeing the markets really mixed. I mean, we can see the resource sector down quite significantly, just over 1.25%. On the other hand, we saw the industrials recover quite nicely, up just over 0.75%. Overall, the market is slightly negative. It did start to stay positive, and Harvard, basically flat for the day. But right now, we're about 0.14% down for the day. In terms of the currency, we are kind of holding steady around about the 1460 level. It's kind of level we saw most of yesterday as well. There was a little bit of, significantly weakening in the fall of yesterday, where we went from about 1440, 1430, so up to basically 1460, but we've kind of holding that level today. So even though we're slightly weaker, we're not significantly weaker than we were yesterday.
Imperial Logistics shareholders have given a nod to a 12 billion Rand Dubai Ports World buyout. Talk us through developments on that front.
Yeah, this is basically, obviously, in terms of the shareholders, they do obviously want the deal to go through. It's a significant premium to what they were, basically what the shares were valued at before the deal was announced. On the other hand, we are obviously seeing, a significant part of our economy. Imperial Logistics obviously has a significant presence in the South African, economy, being taken over by a international shareholder. This is something I think that we have to obviously consider from a more purely economic point of view. If you look at other parts of the world where we do have these kind of news occurring, often the government steps in and doesn't just look at it from the point of view of whether or not it's going to be good for competition or whatever. From a strategic point of view as well, whether or not this is something that's good for South Africa. But in terms of just what was required for this deal to go through, only 3/4 of the shareholders were required to approve it, and they got closer to 86% of the shareholders. Basically over 15% were not in favor of the deal. So that's quite a strong indicator that this was favored by the shareholders. But like I said, I mean, it's not just purely about the economic or the shareholder valuations behind things. Obviously the Competition Commission will have to look into this kind of stuff just to make sure that it's in the best interest of the country as well.
Now, Spur has signaled that headline earnings per share could rise by up to 35%, but still it says that comparable HEPS could fall by up to 20%. Now, which is it?
Well, look, in terms of like Spur points, you have to understand that this is a company that's really had some, obviously some significant issues over the last year. As you can imagine, with all the lockdowns, etc., happening. Any restaurant business was under a huge amount of pressure. Should the recovery occur, obviously we will see quite a nice recovery, or should it, let me say, this sort of pandemic, abate, we have vaccinations go up like they should this not be an issue next year? Of course, we'll see a recovery come through. But it remains to be seen whether or not that's going to be, returning them to where they were before the crisis. Also to be understood is the fact that Spur is a discretionary consumption business, so people will dispose of the extra cash. We all know the economy has suffered quite badly from the pandemic. We had a recession last year, etc. And that's obviously something that also is going to factor into whether or not the company is able to return to its pre-pandemic situation.
Now, we see the MTN Group affiliate, Emerging Markets Telecommunications Tower Operator, IHS Towers, is pursuing a possible listing on the New York Stock Exchange. Will this in any way have implications for MTN South Africa?
Well, yes, MTN has obviously had some issues with regards to, some of its international operations. We have seen, some issues around basically, of course, Nigeria. We've been seeing things around places, Afghanistan as well. MTN owns about, just under a third, about 29%. And if the listing obviously is profitable, MTN will obviously benefit from it. It operates IHS operates across the world, much in much of Africa, but also in Latin America and in the Middle East. I think it's across 9 countries. So there's an opportunity here for India to realize some value on its holdings there. But it obviously, with regards to Intel's overseas operations, it obviously has had serious negative effects in the last little while. And I think in terms of whether that this is going to be positive going forward, this is certainly absolutely the separation of the parts of the businesses to get into shareholder value has been occurring even in the telecom sector. So I think that maybe something that it is just following. I just certainly aware at the moment within our security that they're running up a real shareholder value for the company.
Mr. Viv Govender, thank you so much for today's market update.